Hi everyone, I'm Paul, and in today's video I'm going to be sharing some backtesting results from implementing some of the concepts from ICT's 2022 mentorship program. One of my personal objectives from the mentorship program is to build a scalping trading system specifically for crypto. I've mentioned this in some of my previous videos and this is still a work in progress. I'm not in a rush and I want to make sure I complete all of ICT's content before I really commit to a particular system. But I will say that I'm starting to narrow my focus and I'm getting a better idea of what that system is probably going to look like in the end. And so I'm looking forward to sharing that with everyone in future videos. For those of you that follow my channel, you know that I just reviewed lesson 11 of ICT's YouTube mentorship program. So if you haven't seen that video, make sure you check it out. Right after finishing recording lesson 11, I found the exact same setup in Bitcoin on the 24th of May. And so that's the backtesting result that I'm going to share with you today. And I'm going to go through my entire end-to-end process, right from bias to execution, to show you exactly what that looks like and how it worked out. Keep in mind this trade is from backtesting, so it should be looked at through that lens. So please like, subscribe, and let's jump into today's video. So starting with our daily chart in Bitcoin, you can see from the all-time highs late last year at about 69,000 up to today, we've traded all the way down almost into the 25,000s. The trend's been clearly bearish. And whilst we have had this period of sideways consolidation most of this year, the last few weeks especially has been all one-way traffic. And so if we look at the last part of that move from this high here to this low and we run a fib there, you can see at our 50% mark we've got an imbalance there. And we can see this move took out all of this sell side liquidity on the way down. So here, here, and here, taking out all of those stops before finally finishing here and consolidating sideways. And so periods of consolidation are always tricky to determine bias. And so if we just have a look at the next few days, so we're sitting here on the 23rd of May and I'm looking to the 24th, trying to determine what my bias is. And based on what's been happening in the market over this period, you can see we've been ranging from around 31,003 to about 28,007, just roughly. And you can see this candle has pretty much engulfed all of the previous move upwards. So my expectation is we're going to revisit the bottom end of this channel. So we'll revisit the low of the previous day and probably revisit the lows down here. So I'm expecting another down close candle. And so my bias going into the 24th is bearish. So if we zoom in now to the 4-hour chart, which just by the way is one of my favorite charts to trade on, you can much more clearly see this trading range that Bitcoin's been in for the last week or so. You can see the top of the channel here and the bottom of the channel there, and obviously just a little bit of a deviation here, but you can see it's quite neatly traded in this range for the past couple of days. So keep in mind my bias is bearish and I'm expecting lower prices, but I'm not expecting a big move. Remember, I'm just going to be scalping this particular trade, so I'm not looking for a big move. What I'm really looking for is for price to draw towards a specific point. And so my feeling is that the bottom of this range with all this sell side liquidity that's sitting here at these various lows is going to act like a strong magnet to price, which is going to draw price downwards. And so that's the direction I want to trade, hence my bearish bias. So given that, I'm only looking for bearish setups on the 4-hour chart. And you can see that we have two bearish fair value gaps right here. So remember, our fair value gap is a 3-candle formation. So the fair value gap will form between the low of this first candle, across the body of the second candle, and between the high of that third candle. So you can see it crosses the body of that second candle there. Move of the second candle should be a powerful move, and you can see it breaks market structure here, this short-term low, and trades powerfully down. And so if we're looking to potentially swing trade from this position, you would have your stop up here at the high, or potentially on this candle, just depends on your risk tolerance, and you'd set your limit somewhere inside the body of that fair value gap. And you can see right after that, we have another fair value gap set up again, another bearish one, and you can see we have our 3-candle formation, and that's sitting quite neatly inside that other bearish fair value gap from the first setup. So we now have this zone of interest, and we know that on a higher time frame, we have this bearish fair value setups, which are currently in play. So zooming in again, we're going down to our 1-hour chart now, and you can see we have that top of the channel, that high up here with purple, and we have these two fair value gaps from our 4-hour chart just here. And we've also now got a fair value gap set up on the 1-hour chart just here. So that's our 3-candle formation again. You can see the fair value gaps formed here, and we've broken market structure here with the wicks of these candles. Now we don't have overlapping fair value gaps on both of these time frames now, but we obviously have fair value gap setups which are bearish both going in the direction of our bias. And you can see now we have our various trading zones. So we've got the Asian session here in red, the London session here in yellow, and the New York session here in blue. And it's actually the New York session we're going to trade in this particular setup, because that's just the easiest one to find setups, and it's the one that ICT recommends you start on. In terms of when I implement my own trading system, it's most likely going to be in London based on my testing so far. So zooming in again to our 30-minute chart, you can see we've got another bearish fair value gap set up on this particular time frame. So we have these overlapping bearish fair value gap set up on the 4-hour. We have a bearish fair value gap set up on the 1-hour chart, and we've now got one on the 30-minute chart as well, which is overlapping the 1-hour. So we're starting to build this confluence. So we have a number of bearish fair value gap setups now on multiple time frames, all in the direction of our bias, which is bearish. So zooming in for one final time, we're looking at the 15-minute chart, which is our bellwether chart. It's starting to get a little bit messy. You can see the bearish fair value gap set up here. So again, it's overlapping our existing fair value gap setup we have on the 4-hour chart. So we now have overlapping on the 4-hour. We have an overlapping between the 30-minute and the 1-hour. And now on the 15-minute, we have this fair value gap set up right here. We're just going to play the market forward now and just see how the price action unravels given our analysis so far. So you can see as we've traded through the Asia session, so that's this section in red here, you can see that prices, pretty closely respected these fair value gaps that we've set out from our 1-hour and our 30-minute charts. Keep in mind, we're looking for setups that are going to trigger in either London or New York, because we're looking at trading in the New York session. So if we stop just here, you can see that as we've come into this London session, you can see we've got another bearish fair value gap setup that's just occurred right here. So that's our 3 candle formation just there. We've also got our opening price. So remember, this is our opening price from midnight. You can see that in purple. Now, the other interesting thing is we've got another fair value gap set up just here, which is on our 15-minute chart. So if we zoom out here, you can see that bearish fair value gap set up there. So again, we're just building confluence, giving us more confidence that this particular zone is somewhere where we can be going short, and that we have a number of confluence setups on multiple time frames, which should increase our probability of a successful trade. So just before we go on to that New York session setup, you can see that if we'd taken a trade in London, which is the setup that I'm going to be probably trading in my scalping system, if we'd taken this particular setup here, so using this 5-minute entry here, you can see if we'd taken that at any time along here, we would have picked up a pretty easy 3-hour return. So basically our stop would have been here. We would have had our limit to buy down here at this candle. So I'll just mark that up so it's easier to see. And you can see here, if we had entered this trade here, and pretty much my system is going to be predicated on a 3-hour return, just in and out, no discretion in terms of running it longer than that. You can see we would have pretty easily picked up a 3-hour return just there. And so this trade would have been leveraging all of those confluent bearish fair value gap setups we on those various time frames, and also trading in line with our directional bias to the downside. Let's get back to our setup and entry in the New York session. So now we're in the New York session, and you can see we had quite a lot of volatility just leading up to the beginning of the session. And whilst price did move considerably in the London session and leading up into the New York session, you can see it still really respected those bearish fair value gap setups that we marked out earlier in the video. Now that we've just entered the New York session, you can see we've immediately had these big down candles here, which has created this fair value gap right here. And so this is the one that I'm really focusing on now that we're in the New York session, and this is where I want to be taking my short trade for that move downwards. And so one of the obvious questions is, why would I take this setup as opposed to any of the other setups? Well, there's 2 things. So firstly, I want to be trading in the New York session. That's the one that has the highest probability of success, because that's what ICT's YouTube mentorship program is all built around, is that New York session. So that's the first thing. I want to be trading in that session. I've got all this confluence, which I've gone through before, but that's really the first part, is I want to be trading in New York. All my setups are pointing towards that. I've now got a setup on that 5-minute chart, which I can now go short on, which is in the direction of my bias. Now, the second thing that's also really important is that I feel like market structure is in my favor. Now, this is the thing that I took out of lesson 11, which stood out as soon as I was looking at this chart. So you can see we have these intermediate term highs here and here. I'll just quickly mark these up. So we have these intermediate term highs here And you can see it's only a very small amount, but each intermediate term high is lower than the one previous to it. So you can see this one is higher than this one, and then this one is higher than that one. And so what that tells me is that price has not gone above those intermediate term highs on any of these impulse moves. And in fact, each move, the high has been lower than the previous high. And so that gives me a lot more confidence that this setup is not going to eclipse the high of this intermediate term high. So remember that if I'm using my bearish fair value gap setup here, it's my 3 candle formation. So I'm going to go short inside this fair value gap here, and my stop is going to reside up here at the high. So I don't want price to go above this high because that's obviously going to stop me out. And so this particular market structure of the consecutive intermediate term highs, which are lower than the last one, gives me more confidence that price is going to go down and it's not going to breach this high, which is where my stop will be residing. Now in this particular setup, what I'm going to look at is doing an order block entry. So you can see the order block is these up close candles before the down move, which has a fair value gap here. So I'm going to use that as my entry just here. My limit to go short is going to be at the open of this candle. So I'm not using the wick, I'm using the body. So the bottom, which is the open, and that's where I'm going to be going short. And so you can see I've marked out my short position here. I'm going to be going short at the body of this candle. And my target is this long-term low here. So I'm looking at price to draw down towards this liquidity down here at this long-term low. So let's see how that played out. So you can see we took a little bit of heat on that trade just after we entered it before price really got going. So you can see we didn't quite take out the sell side liquidity here with this move down, but this one did. And once we took out that liquidity there, it really took off. Now you remember we had our longer term low below that. And let's see if price continued to draw towards that point. And so you can see it didn't. So it didn't go all the way down to the sell side liquidity lower there. It just took out the more recent one here, which is where our target was. So you can see that's still a great trade. That's over 4.6, almost 4.7 R return. And we're in that trade for about 2 hours. So you can also see the importance of having, good targets and also not being too greedy. If we'd been a little bit too greedy, expecting a really big move, you can see it would have reversed on us before taking out that sell side liquidity down here. And you can see we just would have given up all of our profits off that trade and we would have eventually got stopped out as the market traded back up into that fair value gap on the 4-hour chart. And then it obviously trades lower after that. So if you've watched my review of lesson 11, that'll look eerily familiar. It was basically the same kind of setup. So when I was doing my back testing, this really immediately jumped out and you can see how successful that setup was on Bitcoin as it was on the NASDAQ. So that was a bit of an insight into the scalping system that I'm looking to build for crypto. I particularly like the concept of layering those fair value gaps across multiple time frames in the direction of my bias. Let me know what you think in the comments. And if you enjoyed this video, make sure you like it. That helps other people to find it. And if you'd like to see more content like this, make sure you subscribe to my channel. Thanks for watching and I'll see you on the next video.